Here are the triangle trend indicators for NinjaTrader on 5/29/2012 on the ES for Renko. This was a long trade right here where this arrow is, and this was for 5 points. I got out intra-bar right up in here before this final leg of the triangle formed right in here. Now, looking back on the chart, I probably should have gone long somewhere in this area right here when the swing cycle crossed above the variable band and turned green, and the Bollinger Band differential oscillator at this same time crossed above its zero line, and when it crosses above its zero line, that indicates an uptrend of the equity. But in any event, I didn't go long until here. Now, one reasonably safe trade to take is when the stock is either in an the equity is either in an uptrend or a downtrend, and the swing cycle comes down and then starts back up again, or comes up and starts back down if it's a downtrend. And this is called a failed cycle. Now, a cycle would go all the way down to the bottom, and you can set the swing cycle so that it puts the level right over here, and you can see it's yellow here, puts a yellow 4.45 marker right in here. So as it started up a little bit, but in any event, this is its zero line right here, and this is where I went short on this trade as the dots turned red here on the DMI differential, and it started crossing below its zero line. The DIX was already down here. Of course, there was a down triangle here. The RWO was indicating a downtrend, and the indicator line of the Bollinger Band differential oscillator had crossed below the Bollinger Bands, and the midline of the Bollinger Bands had turned red. Now, when this happens, that could be a retracement of an uptrend, and it's not until the Bollinger Band differential oscillator crosses below the zero line that you know that it is actually a downtrend in progress. So when you take this trade here, you want to be ready to get out of the trade if the Bollinger Band differential stalls out at the zero line here, which it did not. It went right on through here. This was a slow developing trade. It took about 25 minutes between this bar and when this bar started to form right in here, and also it stalled out down here, and it was about 30 minutes in here where there wasn't any more down movement, and this was a 6-point trade running through here. You can also see a divergence in the DIX as it started up here, and the RWO was showing divergence as it was moving up here, even though the equity had moved down in here. So because of that, it looked like a good idea to get out of the trade right here.